Hello traders, Gary Wagner here. It is 11:47 in Honolulu, 5:47 in New York on Monday, 15th day of August 2022, and this is the daily report for gold and silver. Gold clearly sold off hard today due to a combination of dollar strength as well as market participants being active sellers in the market. Gold opened, basis the most active December contract, at approximately $1,819 today and plunged below $1,800, trading to a low of $1,787.60 before finding support. Currently, we have December gold futures down $20.40 and fixed at $1,795.10. As I said, it was a combination of dollar strength as well as market participants being active sellers. We can see that the dollar gained a considerable amount, almost a full percentage point, 0.86%. And it used the 50-day moving average as a clear level of support today, closing there on Friday, opening there, and then trading substantially higher throughout the day. Lastly, silver dropped about 2.29%, with the most active September contract currently fixed at $20.22.5, after factoring in today's decline of about 47 cents. Dollar strength definitely was an important component to today's sell-off in gold, with gold losing approximately $20. We can see that we had interim support at the 23.6% Fibonacci retracement level last week. On Friday, it closed right at the 50-day moving average, and today the dollar opened at the 50-day moving average and moved substantially off of that, gaining almost a full percentage point. I've just put up the Kitco Gold Index, and at the time I took this screen print, we had gold down $23.90, with spot gold fixed at $1,780.10. As you can see, dollar strength was the overwhelming force, taking gold lower, decreasing spot gold by $14.25, but sellers were active, taking gold down an additional $9.65. If you recall from Friday's weekend review, I was looking at the potential for gold to move higher in the next couple of weeks based on the fact that it had found tentative support at 1,800. That obviously eroded today, with gold opening at approximately 1,820 and plummeting to the 50-day moving average. What you can see on this is a couple of examples of how support and resistance are the same thing. We have a basic support trend line, which is fixing two lows, this low that occurred in May and this low that occurred in August of 2021, that we use for a support trend line up until the point that gold broke through that, because at that point it becomes a good indicator of long-term resistance. Market traded to a low that matched the flash crash, which I find interesting. That's here and here. And then as it came back up, you can see that it effectively found resistance right at this price point. Another interesting facet is that traders did buy the dip today. I don't know if that's going to hold, but that occurred at the 50-day moving average, which also corresponded to the low that came in May. Another strong indication that we could have seen this most recent trend, in which gold picked up approximately $137 from the low that occurred in the middle of July up to these most recent highs, is by using a Heikin-Ashi chart. We can see that on the way down, as the selling pressure began to lessen, the body size got smaller, the tails got longer, completely different than when we look at how these candles looked during the center when the trend had the greatest strength. You had no upper wick, and really pretty large body sizes that began to reduce. The same thing occurred on this upswing. We can see that over the last couple of trading days, we've seen these small green Henkin-Ashi candles. Today, we got our first red one. Of course, you have to have follow through. We saw this red one occur, and then the market went higher. This simply represents the price difference between where New York closed and where Australia is currently trading. The key is going to be whether or not gold is able to hold support at the 50-day moving average. Because if it cannot, it could have a further ways to go down, because really technical support doesn't come in till the lows of $1,680. However, I believe there is a distinct possibility that it will find support, but that's really going to be dependent upon the minutes of the FOMC meeting when they're released on Wednesday. For right now, we certainly didn't see any strength on the open, as we said was our requirement to think about going long. So we are going to remain with a neutral stance with no active trades in gold or silver. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.